All right, hey guys, Sam here. Monday afternoon, Monday the 18th. I just had another chart sent over by a member that I thought we would take a look at. It's an interesting cryptocurrency. It's been a difficult coin to trade, but there's some nuanced Elliott Wave structure here that I thought might be a good segue into some of the slightly more advanced content with regards to applying Elliott Wave in crypto and where it can be advantageous to us, and as well as showing you some of the downside, some of the risk when you're taking this approach into the market. So here's the chart that was sent over. Okay, this guy's a very well-known author on TradingView. And he's proposed that on ZCash here, on this 60-minute chart, that there's a buy here. And it's a very rudimentary analysis. Simple. Just because it's simple doesn't mean it's not effective. So we've got a well-established downtrend here. The break of that would imply a move up to, I guess he's proposing that a minimum here is to this resistance level here. And we see this is outlined as resistance because of this prior low likely to provide resistance. So a nice, that's a little swing trade. That's nothing wrong with that. What are you, from 180 to 200? So, nothing wrong with that for a little, hitting a single. Okay, maybe it goes higher. You don't know, but not a bad looking little trade. So the member asked me to take a look at this and give my thoughts, and I thought, we might look at it. ZCash is a really interesting story, over on CoinGecko, where I always encourage you to look and refer to if you're looking at a crypto that you're not familiar with, or you're wondering how where it ranks in a competitive context to the other majors. So ZCash is absolutely a major. It's in the top 10 here. It's got good total scoring. It's got a lot of interest amongst the development community. I would encourage you to go visit their site. They're doing some really interesting things in terms of encryption and anonymous transfer of value, and they have a nice little analogy here implying that if Bitcoin is like the HTTP for money, Zcash is the secured version of that, or the HTTPS. Right? Interesting. Worth a read. But let's go back to how we would approach trading it. So I previously had a trade on Zcash, and this goes back September 4th, right? So a couple of weeks ago. And I had proposed that there was a long here, and you can find this on my TradingView profile and read as to what my analysis was at the time. But you can look at it here, and we can see we had this 5-wave sequence, and we had come back down, made a retracement to the 618. It popped through a little bit, tagging the 100. And the premise was that we had a low risk, high reward potential trade here, as I'm always looking for, right, with two targets. Here's a 100% if the analysis was correct and the wave count was correct, and we had a wave too low in and we'd started to move away, that our first target was going to be 100% of the wave one. Second target would have been the 1618, which we know approximately 75% of the wave threes are going to go to that level. So this would have changed that structure. So this would have been 1, 2. This would have been the 3, 4, 5. Either way, we had good risk reward. So that was a trade worth considering. Well, if you look at the outcome, and if you look at the chart right now, well, of course that's not what happened, right? So down you go, you're stopped out. It happens all the time. Get used to it. But look at the point being the risk taken relative to the potential reward. I propose to you that that's a trade that at the very least I will take every time I see it. That kind of risk reward, that's me all day long. Okay, so a trade is a loser. It does not make money. Does not make it a bad trade, just not a profitable trade. But the technical methodology applied to it, perfectly valid. Stops are just a reality of trading. So get used to it. Okay, so we go back to the current market. Now, if we look at this, So, again, as I continue to emphasize to you, where Elliott is most valuable is when it's just so obvious you can't help but see it. So clearly, on the way up here, we've got a 1-2, big impulsive 3, deep 4, stays above the wave 1, up to a high. And maybe we've got a truncated 5th here. Hard to say. What you can say on this 8-hour chart is that that's a lot of volatility. A lot of volatility, not always what I like to see if I'm approaching a new trade or a coin that I'm not in. The long wicks like this, dangerous. That's highly volatile. That means probability of stop running very high. But we see that terminating now as we get into more predictable swing trading here, and potentially more opportunity for us to get in and have a degree of predictability in terms of our roadmap and where the market might go. So we know that we've got a 5-wave sequence here. So just rudimentary, and you'll find I'm going to do this the same way every time, and I'm trying to instill in you the same habits here. So we go up all the way. All right, so we've retraced well more than 62% of it. We're not quite the 786, but that's a pretty substantial correction from 445 to what we get to 145. So that's a $300 correction. Severe. Almost 70% of that move is corrected. So we have to look at that and say, okay, well, if I take this off, the trend is now down. Trend is down. So if I'm going to come to the high, and you'd probably measure from both of these because it was so close. But this is our last swing before we come down. Yeah, come on. Okay, trend remains intact. So the longer term trend here remains negative. We are bearish below the 618, 322, bearish below. Right, there's been a couple attempts to get beyond, here's the 382 push, they get through the 50, a little retrace, can't get through the 618, and then the sell-off, right, in harmony with what happened in crypto, all through last week. So deep retracement. But look at this. Now we come down almost to the dollar. We have a double bottom. Interesting. This has been a challenging market to trade. So I'm going to take this off here and just reiterate one more time. We are bearish below 322. Until that's broken, the trend remains down. Long-term trend remains down. So let me take that off. So if the trend is down and this is going to be a deeper correction, we have to allow for the possibility that if we just look back and kind of look at the structure here, that a deeper correction, that is a possibility. That we've had this very violent, very volatile 5-wave sequence up, and now we've got the ABC correcting it all the way back down. Possible. But we don't get there. We get to an exact double bottom here. Does that mean we've got a solid low? No, we can't draw that conclusion here. But that's interesting. That we get to a point where the market says, okay, that's low enough. There's value there. Now I'm a buyer. So if we come into it, trying to analyze what's happening and where we are, our potential roadmap, and we start to break this down a little bit, well, we get into this area here, which is what I was basing that trade off of, that ended up being a loser, because of this fact. We know that markets trend in 5s and they correct in 3s. Well, it's hard not to see that as a 5. However, we know from Elliott Wave basic training and the hard rules of Elliott that wave 4 in an impulse wave cannot overlap wave 1, the wave 1 high in this case. But that's a very deep retracement, so far beyond that. So you certainly, if I go back here, at this point, I'm going to take that off. Just, again, it's always easy with the benefit of hindsight. With the market screaming lower and this 3-wave here, you'd have been drawing from here to here. Look at that. We go to the 618. So the anticipation would have been, and the expectation of that trade is that you're going here. and not a bad thought, not a bad trade actually. So you get up to the 618, we don't get through it, we head lower, so you've got good profit there. So what have you got there from 260 to under 200, so that you've got nice profit there. So at the very least, if you're long here with the stop on the other side, maybe on the other side of the 618 or at the 65, you've tightened up your stop. So I'd like to think that you've moved yourself to break even, and now you're just looking for it to run to try and get down here. Very valid stance and position to take in the market based on that fact that you've had this ABC three-wave correction, and now you're screaming away from the 618. Trend continues. Very valid trade. Very valid trade. I'm sure a lot of people took that. I know algos were sellers there. But that's not what happens. We come down here and we pause, and then we start to head back up. So now we have to try and quantify this. Well, because we know the markets trend in the primary direction in fives, this would lead you to believe that we have some sort of change of trend. So there are certain circumstances where Elliott would allow for this overlap, but it was conditional. It could only be in a wave one or in the A wave of a correction. So I'm going to take you to a resource here that I think is valuable. So this is called the Pattern Site. And it's this guy, Thomas Bulkowski, and he has cataloged virtually every pattern known to technicians that has ever been conceptualized and put on a chart. So this is a great resource for all sorts of technical patterns. A good site. The guy does nice work. He has no bias for or against Elliott. He just catalogs the patterns for you. So if you're looking here at these patterns, and of course he's referencing the Bible of Elliott Wave, which is Frost and Prechter's The Elliott Wave Principle. We go to the leading diagonal. They're both wedges, and this is I'm going to use this as our reference here. And you can see, and I'll let you read this on your own, there are conditions where in an A wave or a one wave that because really the premise is that the new trend is not established. So you have this volatility. Indecision. Are we breaking out? Are we retracing? What are we doing? A lot of indecision. So this has the potential, as I was trading it, this had the potential to be a one wave, start of a new trend. We were trading off the 2, looking for that. And that would have been a valid count. Leading diagonal. Okay? Struggling, fighting for a new trend. Then the big retrace. I was looking to be a buy here. I was a buyer. I did take that trade. I did get stopped out. But not a bad trade, right? Not a bad trade, but just not a profitable trade. So we know that that's invalidated. But what's interesting here is, how the analysis of this, and there was a good example here that I wanted to show to you. Just sort of a learning example. Okay, so as we were coming down here, you can see that we know that market's correct in threes, but if we were looking for that A, B, C, we want to see 5 waves. Yeah, let me get it for you. We want to see 5 waves in the C. So whether we start here or here, either way, we've got A, B. This ends up being a C. So is that a reasonable spot to be looking for the market to change direction? Right? And that again, with hindsight, we know that's an ABC. At the time, that could have very easily have been a 1, 2, 3. Here's the 4. We're going down for the 5. Possible. Doesn't happen. Where do we stall on the way back? Take note. We get up. Not quite the 786. Not quite. But we can't get through. We can't get to a new low. Makes you suspicious. Right, so we know with hindsight that we have an ABC here, and we can see if we open this up a little bit, that within that C we have good structure because we can draw into this. We can draw a very clear 5-wave sequence. Right, very, very clear and clean. So that would have been accurate for a 1, 2, 3 impulsive or an ABC. Could have been either. You would have had no way of knowing at that time, other than the dominant trend having been this impulsive move higher. Perhaps you're putting in a 2. You know, that's the thing, right? In real time, you don't know. You can only surmise and evaluate. Am I seeing conditions that would support the premise that this is now a good low for either a C wave or a 3 wave? My proposal to you is not that you would be a buyer here trying to catch the bottom. I mean, for the brave, you can take that trade with a tight stop, but that's really not the trade. If you were playing this as a 1, 2, 3, 4, here's your trade. There's the 4, right? If this had been the 1, we know the 4 doesn't get past it. We were looking for new lows. Doesn't happen. Starts to move up the other direction. Well, if it's not a 3, and now we've taken out the 1, we're showing evidence of perhaps a change of trend. Because this now, we seem to be moving now. We have a series of, take note, we have a series of higher highs and higher lows. Higher high, higher low. Would lead you to believe that we have a trend change. That's the definition of a trend. Higher highs, higher lows of an uptrend. So we start to draw on this, that possibility that we've got a low. There's our 1, 2, 3, 4, 5. Okay, but take note in here. The assumption here that we have a leading diagonal and that now we have a 1. This is why I wanted to show you this, because it's a good example. So within this leading diagonal, with these overlaps of wave 1 via wave 4, take note at this last wave. Let me go down to a 4-hour. We see, and this is kind of a rare combination, which I wanted to show this to you, is why I wanted to show this to you. So if we think that this is a completed 1 wave, a leading diagonal, right? Leading diagonal, leading us into a 1 wave. The premise would be we'd end with 5s in the 5th. So let's carve that out. So we got a 1, we got a 2, we got a 3, we get a 4, and we get a 5. Implying that because we know markets trend in 5s and correct in 3s, that we've got a new trend established here. So we have the 5th here in the 5th, but we also have overlap here of 4 to the 1, invalidating the traditional impulse motive wave, because we get that overlap. But now what we have is what's called an ending diagonal. These are the 2 diagonals that Elliott allowed for, and you find the ending diagonal, or a wedge as it's referred to, when markets are about to change trend. You get this very tight pattern, indecision, can't break sharply higher, can't break sharply lower. Here it is on the downside, choppy wedge. In traditional technical analysis, old school charting, this would just show as a wedge. The anticipation being a break to the other side, change of trend. We see it as a wedge here on the way down, break. Now we're moving higher, change of trend. In Elliott terminology, we've got an ending diagonal, only found in the 5th wave, only found. Okay, so here we see that. Here we see that example. Ending diagonal. So we've got an unusual combination. We've got an ending diagonal finishing a leading diagonal. You don't see that very often. Interesting. So made for a tradable event, because the assumption was that if this is a 1, here's our low, we're going to come back and we're going to trade off of the 50 of the 618. Now in this case, I took this because we went down, we came up, and then here was the potential 2. That's the trade that I'm trying to teach you. So we had all the right ingredients. We had an ABC. Sorry. We had an A, we had a B, we had a C. There's the 100. Okay, now we start to move away from it. So the trade, because we know that a wave 2 is going to be between the 50 and the 786 about 80% of the time. We were trading that off of the 618. Stopped out. Maybe a second time to get into it. It just doesn't happen. Just doesn't happen. But a very reasonable trade on the assumption that we had a one wave in. We've had an ABC correction. It's a little fast. It's a little fast. It wasn't perfect because look at the length of time of this one wave and how quickly we correct in the two. Possible. But the risk reward here was so good because if we're going to go up to at least 100% of it and we've got to stop there, you got to take that. You got to take that trade. Right? Regardless of whether it's winner or loser, that's a very valid trade and the kind of risk reward scenario you continually need to put yourself in front of or into so that you can take advantage of those times when it ends up being profitable and ends up being the right roadmap. In this case, it just doesn't. Not a bad trade, just not a profitable trade. So what's happened since then? Well, now, you'll note as we talk about the relationship of time, now we have this being corrected with a little bit more time. But as you look at that, you see the double bottom here. Take this off. We have this possibility here. It's an annoying part of trading view. We've got perhaps a 1-2, an ABC coming down here. Maybe. But it's not unlike what we had over here. Not unlike that. We can't be sure. Can't be sure. Is it 1, 2, 3 or is it ABC? Now take a look here. What reduces the probability of this being a 2 is how deep it goes. Now technically we don't, we'd be very close. Exchange to exchange would probably vary here. But it's a perfect double bottom, at least on Poloniex. It's a perfect double bottom. We do not break it. So in the most strict technical terms, this still could be a wave 2. But it's less and less likely. Less and less likely, considering the depth of that retracement. So if it's not an ABC and this correction is not complete, then what does that lead us to? That leads us to this presumption. Because we're not done yet. We're not done yet. Now, let me zoom in here and get this tightened up a little bit. Let me go down to a 2-hour. And we'll get this is where the Dolchin channel can be helpful because you can get those right where they should be. Okay, let's look at that relationship between 2 and what we're retracing now for the 4. And look where we've come. Right to the 50. And we are, it's going to vary exchange to exchange, but we may have overlapped it by $1 or $2. It's going to be very close, exchange to exchange. But we've run into the 50, which is the most likely spot for us to hit resistance. We've also got this prior low here, offering that resistance. We've got an A, B, C, 3 wave implying it's corrective. Likely outcome. I mean, there's a trade sitting right there if you're willing to be short of Zcash. It's absolutely a very reasonable position to take here as a short. Here's our first target, -23. We're wrong on the other side. I mean, you could even you could go tighter than that because of this one pivot. But if you're going to be consistent, let's say you went to the 65, 4.5 to 1. Very, very tradable. You could stop the video and go get this right now. I'm tempted to. But if we think back to what, okay, I'm going to take that off, to where this whole conversation started, which is this break here. Do you want to be a buyer here? I don't. I don't want to be a buyer there. I don't care what happens there. That does not meet my trade requirements. What I see, until I see evidence to the contrary, I do not want to be a buyer here because I don't see evidence that this is completed yet. Right now, that is a textbook setup for a fourth wave. Textbook. Now, take note here. If this goes beyond the wave 1, let's say it goes up here to the 618. What do we have at that point? We've invalidated the 1. So we don't have a traditional impulse. What do we have? We have the ending diagonal. Ending diagonal. The wedge coming down. Wave 1 and 4 overlap. They overlap. Still valid for an ending diagonal. So here's what he's trading. Get my trend line here. So he's proposing that this channel is about to be broken. I'm proposing to you that that's not a long. That's not a long there. Absolutely not a long. I wouldn't consider buying it there. That does not mean that it won't be a profitable trade. It just doesn't meet what I'm looking for. I'd be on the other side of his trade. I want to be on the other side of it. I'll take the other side of that all day long because I see that 50. I see this wave structure. I see that as our next target. Now, when would I want to be long? When would I want to be long? Well, this is much like the videos we did earlier in the day. We can't confirm this. We can't confirm this as a low. I don't see a great 5-wave sequence down there, but I'm gonna take that off, and let's say that is our low. Well, when? So if we're coming back up, all the way back up, well, we got to get through this 50. We got to get through the 618. But let's look on the other side. So here's maybe his premise is that we put in a low, and here's our maybe an ABC into the 50, and now we're heading up to the 382 or the negative 23. Excuse me. Maybe. Well, when since we know that if indeed that's right, and this is a hard pivot, and this is a 1-2, when can we confirm that we've got a 3? Well, at the very least, we got to get beyond 100% of wave 1. So let me take that off. Let's go to our projection tool. We know that that's a 1. That's our 2. That we can't, the highest probability, in fact, 75%, right? Just repeating what we've been through a couple of times here. 75% of the wave 3s are going to go to the 161, this little sweet spot here. So that would be a target if you were going to be a buyer here. And take note here, we're going to hit some prior resistance based on this prior support, right? So this is likely to be that zone where we're gonna run into resistance. Here's our target. Now, if I see that, if we're going to do this, well, then I have a whole lot more confidence that I've got a 1, 2, and there's my 3. But where's our trade? See, this is the other side of it. That's the target, potentially the sell. We know we're likely to hit some resistance because of this low. We can see how high, low, high, potentially the high here being the resistance. So if we're going to come back down, where's the long? Well, our long, or my long, if you will, would be right here. Now we're coming back down. I'm going to take this off just to declutter the chart. There's our target. We're coming back. We're looking to be a buyer here. Well, really, for a wave 4, because we know that the majority are going to be between the 382 and the 50. That's our buy. We're looking for this to this or this. So then you'd have 2 targets. You'd have 2 targets. What's the risk reward? Well, let's look at it. If we're a buyer here, first target, we're going to put our stop under the 618. Not quite a 4-to-1. We get the upside all the way. There's not quite 6-to-1. Tradable? Absolutely. Absolutely. You see, look, we could put the wave 1 high right here. So if we're stopped here, we might give it one more. We might give it one more at the 618 if we're stopped out. You might again, it's always about what's happening. What kind of structure here? Do I see a good 5-wave sequence in that 3? Remember, waves within waves. Can I count out a clear 5 wave to identify that as an impulsive move? And am I going to correct that in 3s? Based on how that looks would determine whether or not I go at it twice there. But the first one, if we get that, that's absolutely the long side of that trade. So until then, we wait. We wait. Because right now, the highest probability, take that off, is that we're doing that. That's what I see. Right, as we've come in and look at this resistance, these prior lows, and all the way back over here, prior lows, going to be a struggle to get through. My bias would be to the short side. Okay, that's a longer video than normal, but I thought there were some good lessons to learn in there. You might. I'll just show you this one last thing. You could even just go to Google and type in, if you want to see more examples of these leading and ending diagonals. Lots of examples. Just go over to images after putting that into Google. Look at these images, and you'll see them over and over and over again. And you'll see them in context, in markets. They repeat all the time. Very commonly seen at the start of new trends or at the end of a trend. That's where it's most identifiable, at the end of a trend, in that 5th wave, when you get that chop, the battle for the new trend, right? There's a fight between bulls and bears, and then finally it breaks out of that wedge, and then you get the trend change. So some good examples there, lots of things to look at. That's why I always tell you there's so much material online with regards to Elliott patterns that, you know, it seems to me a better use of both of our time for me to refer you to good resources where you can just visually see it, and then I'll show you how it applies to the market. Okay? All right, we'll wrap it there. Back with more later. Okay, guys.